Okay, we're good?
Yeah.
Excellent. Welcome, everybody. It is our April Lunch and Learn. My name is Elise Hatton, and it is my pleasure to welcome you to our April Lunch and Learn, as I just said. As you know, Rockhampton Regional Council and the Smart Hub in particular, we're very focused on supporting our business community and all people in business, especially now in this time where we all face COVID-19 and as the situation unfolds and as things are changing. So we're very excited about today's Lunch and Learn topic, the tips and traps of the COVID-19 business relief measures. So one thing that we do know is that there is a lot of information about all the different measures that we as the business community can access to help us through the current crisis. However, what isn't so clear is what the consequences of taking advantage of these measures will be for us as a business community later on. So we have three incredible people to help us decode and demystify the traps of all of the measures that are available to us. We have Michelle Williamson, Peter Schoenen, and we also have, oh God, now I can't remember. Scott, sorry, Scott. How can I remember? How can I forget you? Scott Moss. Thank you so much for joining us. Really, really appreciate your time. I might hand over to you to introduce yourself in a moment, but I just want to set the scene for how this will work. So we are all live on our Zoom call together today, and I have some pre-prepared questions that I'll ask the panel, and then I'll leave it up to you, our panel members, to decide who will answer each question. But also for the people on our Zoom call, please feel free to ask questions. Now you have two ways of asking questions. You can either unmute yourself and raise your hand and ask a question, or alternatively, if you want to remain anonymous, you can just use the chat box. So just go to the chat box and just type in your question. What will happen is I will read out the question to our panel, and then our panel can answer the question. We're also Facebook Living our Lunch and Learn, as we always do. So what will happen there is Courtney will be monitoring the comments. So if you're joining us via Facebook Live, welcome everybody. Courtney will be monitoring the comments. So if you have a question, please feel free to pop that in the comment of our Facebook Live event, and then Courtney, you will ask those questions on behalf of our business community. Excellent. So without any further ado, let's get started. I'd like for each of you to give us a short introduction of who you are. Scott, I'll start with you. Sorry for that mind blank I just had.
That's all right. Put me on the spot. Hi everyone. I'm Scott Moss. I work at Evans Edwards. I've been in finance industry for forever, and currently having nightmares about JobKeeper.
Peter.
Yeah, g'day, I'm Peter Schoenen. I am a partner at Canars Chartered Accountants. I've worked alongside Scotty and also Michelle for a long period of time, also as part of the accounting industry in Rockhampton. And yeah, it's, as Scotty said, it's a big challenge at the moment getting through everything with regards to the COVID-19 measures, but hopefully we can help you guys out with some questions and answers today.
Wonderful. Michelle.
Hi everyone, Michelle Williamson from Evans Edwards. Yeah, been in the accounting and bookkeeping industry, I think, for forever as well, and this is certainly a lot of unique stuff that we're dealing with at the moment. And yeah, good to have Scott and Pete alongside to hopefully give you guys some good information today.
Wonderful. Thank you so much, panel. We also have three special guests, Julie, April, and Lynn from ANZ Small Business Specialist Team, and they'll be jumping in and answering some questions where appropriate about lending and banking related questions. So feel free to ask those as well. So we might get started. As I mentioned before, if you have any questions, please feel free just to raise your hand, just show me that you have a question, and then we'll give you an opportunity to ask the question. But to start with, I'm going to ask our first pre-prepared question. It says, I'm a sole trader and I have a decline in my business. Will I receive the $10,000 cash flow boost? And how do I ensure that I get it? Do I have to lodge the latest activity statement?
Do you want me to take that one?
Yeah, mate.
Okay.
I'm happy to take that. I guess there's a few elements in that question. Firstly, the cash flow boost is a tax-free grants to employers, not so much just to registered businesses, but you have to have employers on your books to get the cash flow boost. Secondly, we talked there about a decline in business. You don't need to have suffered or to be able to demonstrate any decline in turnover to be able to claim that cash flow boost. Simply a cash benefit to businesses that employ staff. So you don't need to demonstrate any sort of decline there. It's not like the JobKeeper where you need to demonstrate that 30 or 50% decline in turnover. Secondly, yes, you do have to lodge an activity statement before that cash flow boost will come through. The first cash flow boost comes through on the March activity statement, and a couple provisos with that is you have to have either lodged your 2019 tax return or you have to have lodged another activity statement. Is it in the last couple of years, Michelle?
Yeah, I think so.
Yeah.
Last 12 months.
So basically, you can't have just done nothing for the last couple of years and then all of a sudden lodge your March activity statement and expect to get that cash flow boost. You have to be pretty up to date with your ATO lodgements. But certainly, if you're a sole trader and you employ other staff and you have to do your March activity statement, you will get that minimum $10,000 cash flow boost on your March activity statement. The $10,000 is just the minimum amount of the initial payment. The actual cash flow boost program is a minimum of 20 grand and a maximum of 100,000. And the actual amount that you get is spread over the next 6 months, and it does depend on the level of PAYG withholding that you have to withhold from your employees and that you report on your activity statement.
Scott, if I'm correct, it really comes as a credit off your activity statement payment as well, doesn't it, at some point in time? So if somebody has a GST amount on their BAS at, say, $20,000, the $10,000 can come off that and you only pay $10,000 on your BAS from that point of view as well. Is that right, mate? Yep.
Yep, that's right. Yeah.
So you might not necessarily get it in cash. It might just be a reduction of your business activity statement if you haven't paid that amount. That's my understanding of it.
Yeah, so you don't get out of paying whatever you would normally owe on your March activity statement. But if you normally, like if your activity statement debt would otherwise be $5,000 that you owe the ATO, the effect of the minimum $10,000 cash flow boost is that you're now getting a $5,000 refund instead of having to pay $5,000.
Yeah.
So,
I think, sorry, Scott, I was going to say, I think a couple of the positives that we've seen out of this and a bit of movement from the ATO is one, if you do happen to end up in a refundable position overall, they're sending those refunds through the bank accounts pretty quickly. If you have an existing debt with the ATO and you end up with a refundable position as a result of this boost, they're still refunding that money to you. They're not actually taking that and applying that against existing debts. So, yeah, some positive moves from the ATO there.
I guess when it came out, though, sole traders who pay pay-as-you-go installments themselves rather than paying themselves wages like you would do in a company, they weren't eligible to receive the $10,000 cash boost if they didn't employ anybody. I guess that was a bit of a quirk in the rules compared to if you were in a company structure and you employed yourself, you would be able to get the $10,000 payment. So it is a bit of a difference there in the sole trader structure. Whereas if you don't employ anybody and you just take drawings yourself, you can't actually get the $10,000 cash boost.
Yeah.
Excellent. Thank you, panel. So that kind of leads me into the next question. It says a JobKeeper for a sole trader with no employees. So again, kind of similar scenario. What do people have to do? What can they do? And by what date should they do those things?
Yeah, so I think I mentioned before that the cash flow boost wasn't tested in terms of a decline in turnover. JobKeeper is most certainly tested in terms of a decline in turnover. You have to have demonstrated, for most businesses, it's a 30% decline. So provided that the business, which is operated as a sole trader, has suffered or can demonstrate that they've incurred a 30% downturn in turnover, whether that be in the month of March, in the month of April, or expected across the April quarter, whether that's on a cash or an accruals basis. You get a number of, there's a number of ways you can test that 30% decline, but provided you can demonstrate that, the difference with JobKeeper is that you don't actually have to have any employees to get access to JobKeeper. So every business can nominate one business participant. I think the ATO term it a business participant that you can nominate as a recipient for JobKeeper purposes. So in this case, a sole trader, they can't employ themselves. You just can't be an employee of yourself. So as a sole trader, you can nominate yourself as the business participant and still get the benefit of the JobKeeper payment, provided you meet all the other eligibility criteria. At this stage, you have to have enrolled, up until yesterday, you had to have enrolled by the 30th of April, but I think that's been extended now. Is it the 7th or the 8th? The 8th, I think.
So there's two dates there. There's your enrolment date, which is notifying the ATO that you're eligible. That's now 31st of May. The requirement to pay your employees the $1,500 a fortnight, that's been extended to the 8th of May. Now, obviously, if you're, a sole trader or a partnership or something like that, and you don't have any employees, you don't actually have to make the $1,500 payment to yourself. So effectively for those entities, you've got until the 31st of May to figure it out and get enrolled.
There's a couple of rules with that, Scotty, isn't there? Is that you can't be an employee of another business on the pay-as-you-go withholding to get that. So if you're a sole trader and you work as a part-time person at Coles, for example, then you won't actually be eligible for JobKeeper because you have an employment somewhere else as well. So that's on the designations there. And the other thing to be careful is that you do need to fill out a JobKeeper nomination form. And make sure you do that before you claim as well. So that's on the tax office website, and sole traders need to fill out a special form for that one as well, which is a bit different to the employee nomination form. It's just a business participant nomination form as well.
Sorry, I was just going to mention that there is, or there was an area on the ATO website under the JobKeeper, where all the JobKeeper info is, where you could put in your name and contact details to receive further updates. That's not actually enrolling in the JobKeeper system. I've come across a couple of people that think they're enrolled, but really all they've done is put their details in to receive updates. To enroll in JobKeeper, you need to do that either via the business portal, or as your accountants, they'll have access to the ATO portal. You can do it there as well. But it's not just, putting your contact details into the ATO generic website there to enroll.
Yeah, I think that's an important point because I've had quite a few people get confused with that as well. It's almost 3 stages to that. There was that initial step that you just spoke about, Scott, where you registered your interest. Then you have to actually enroll. And then there's a 3rd step that we haven't seen released yet, which should be coming on Monday, where you basically confirm your details. And it's that 3rd step that you'll actually see the payments flow through from there. So don't just think, oh, great, I've enrolled, that's it, the money will start flowing through. There will be this 3rd step to come, and that'll be something that you'll have to do on a monthly basis to trigger the payments to come through.
Yeah. You do need to submit your monthly payment claim before the end of the following month. So the program starts in April. You need to submit your April payment by the end of May, or you risk potentially missing out.
Yeah.
Okay, so we have a question via the chat, anonymous question. So if I lodge my own BAS, how would I know when to withhold the PAYG for future BASs?
So is that person employing people?
If you could just let us know if you're employing people, that will help us answer that question.
So the key to the cash flow boost, you have to have had paid employees on your books in the March quarter. I think that's right.
Yep.
So you can't have registered, like you can't register now, I don't believe, and expect to get the cash flow boosts. Or do you still get it for the June quarter, Pete?
No, mate. So you actually have to be employing prior to the 12th of March to be eligible for the cash flow boost. Yeah, anything after that, and you meet those other criteria that you were talking about, Scotty, there. But yeah, you can't all of a sudden put someone on the books at the 1st of April. You won't be eligible for any future cash flow boosts either. So yeah.
That question's actually from Jeanette. Sorry, Jeanette, if you want to unmute and speak. Oh, we're having trouble hearing you.
So this is Lynn from the ANZ Bank. I just didn't thought we might complement what the panel has been saying with regards to how to bridge that gap with regards to the JobKeeper payments. So if you've lodged your request to the ATO and you've got your approval and a invoice number, you can come into the banks, and we're understanding that the 4 major banks are doing it, and we can get you an overdraft, which is based on the number of employees that you have, that can just, give you some cash flow now while we're waiting for those first payments to come through. So there's no loan approval fees, no loan administration charges. It's just a convenience because we know you've lodged it with the tax office. So, people should really consider that as just a short-term solution to help them.
Yeah, and just to add a bit more context around that, the JobKeeper program is based around the premise that you need to pay all your eligible employees the $1,500 per fortnight for 2 fortnights before you can claim anything back from the ATO. So for a lot of businesses, there's a real cash flow issue there where they can't afford to pay their staff that much before they claim the money back. So it is really good that the banks are doing that sort of thing. And I think most of the big 4 have a process in place now. Some of them have JobKeeper hotlines. Some of them, obviously frontline staff are all equipped to deal with that sort of thing, which is really cool.
Jeanette, do you want to jump in? No, we can't hear you. I wonder why. Okay, we might move on. Is there anyone else who wants, if you figure out your, whatever's happening with your audio, Jeanette, or if you want to type some more into the chat box, we'll definitely read out what you said. And while we wait for you to do that, I'll just throw it out to the rest of our participants. Anyone else have a question? Okay, so Lisa's asking, is there interest charged on the overdraft with ANZ?
Yes, it's 4.99% on the overdraft.
Okay, 4.99%. Any other questions? Cool, I'll ask my next question. So my business is a partnership and I have 2 employees. Do I not pay myself a wage? Am I entitled to get the JobKeeper as an eligible business participant? If so, do I fill in the eligible nominees form, or is there another form? So I do, so sorry, she does not pay herself. I do not pay myself. Am I entitled to the JobKeeper as an eligible business participant?
So you would be. So most importantly, partners, you can't actually pay yourself a wage, similar to sole traders. So, but yeah, definitely. Importantly, with the partnership, you can only nominate one of the partners to be the business participant. So you'll get one $1,500 a fortnight payment for the partnership, and that business participant would fill in a form. I think Pete mentioned earlier, it's actually a different form to the one that you get your employees to fill out, and they're all found on the ATO website. The ATO website's got quite a good section on JobKeeper there. There's a lot of information there, but it's set out quite well and written in sort of normal English as well, which is helpful.
And just remember again, in terms of eligibility, the business needs to demonstrate that downturn before you look at which employees and which partners are potentially eligible the business you need to be able to demonstrate that 30% downturn.
Okay, so which leads nicely into the next question. I have employees and would like to enroll in the JobKeeper. My turnover did not drop for the month of March, and I expected to not reach the 30% drop for April. I expect my turnover will definitely drop over the 30% for May. When do I start my application?
Yep, so Pete, Michelle, jump in any time, but I've had quite a few of these conversations, as I'm sure you guys have.
Mm-hmm.
So there's a couple options for looking at that. You can enroll in the JobKeeper program from the start, being basically April, based on your anticipated turnover for the April to June 2020 quarter, and assuming that your anticipated turnover shows a 30% drop on the April to June 2019 quarter, the previous corresponding quarter, you can enroll for the full period based on that quarterly projection. It is difficult working on projections. You really should be documenting your assumptions that you've made as to why you think you're going to show that 30% downturn. But I think the ATO have come out and said that if, providing you make reasonable assumptions that your turnover will drop 30% and you enroll based on a projection, if you then, like if your actual turnover then only drops, say 27 or 28%, provided your assumptions were sound and you can demonstrate why you made that decision, they've sort of come out and said, well, they won't be too harsh on you. They're not going to boot you out of the system altogether because your turnover only went down 29% instead of 30%. Where you think you're not confident that you might incur a 30% downturn on a quarterly basis, you can look at May in isolation, and assuming you're going to go down by 30% in May, you can elect just to claim JobKeeper payments from the month of May. So you would miss out on the JobKeeper payments for the first 2 fortnights in April, but from May onwards, if you're looking at your turnover for the month of May 2020 compared to May 2019 and making your assessment just on that basis, you would qualify from May onwards. Important to remember too that once you do qualify, you don't need to reassess. So once you're in, and you're in until the end of the JobKeeper scheme, which is through until basically the end of September, 13 fortnights.
That's one thing that most clients are becoming surprised at, isn't it, mate, really, is that they're finding out, well, they think they can only be in for the month that they're down. But really, it's once you're in for the long haul, so to speak, in for the full 5 months or 6 months. So it's really important that businesses assess their turnover straight away, as in assess it this month, because that way you can get it for the full 6 months. If you can't do it, make sure you recheck it May, recheck it June, because once you get it for one period, then you're in for the rest of the time. Another question I had today was, if I'm down for May, do I get April's? And the answer to that is no. From May through till September, you can't go back until April at all from there. So that was just something that came up today in conversation.
I think around that, there's probably a bit of confusion because we've got this initial transitional period where you can basically register afterwards and go backwards, but that's only for the first 2 fortnights. So basically we've literally just started the 3rd fortnight. So if you're looking at your turnover being down for May, you need to be getting registered in the next couple of weeks, because from now on it becomes prospective. So you need to be enrolled, within that fortnight to be able to get the payments. So as Pete said, it's important, if you're not qualified right now, that you do keep checking regularly on what you think your turnover is likely to be each month, so you can get into the system as soon as possible and then get that support through until the end of September.
Yeah, so I guess just specifically addressing that question, if you're if you have no doubt that you're going to be down by 30% in May, you will be eligible from May onwards, but I'd still be looking at what you anticipate to happen across the April to June quarter, because you could potentially be eligible in April as well, based on that projection. And, you know, depending on how many employees this business might have, you know, that extra 1 month under JobKeeper could equate to quite a lot of money.
So, Scott, did you just answer the question in the chat here, or no?
No, I was just looking at that question. Turnover did not drop for March.
Okay, so still the, and then what about May?
Yeah.
Cool. Sorry, Michelle, what did you want to say?
I was just looking at the question there. Yeah, so in terms of JobKeeper, regardless of the entity that you trade under, whether you're eligible as a business participant or employees, once you meet that qualifying test, you're in the system until it finishes at the end of September.
We're seeing that a fair bit now going to come and happen with, like for example, surgeons starting to open up, and there's been a few, I guess, businesses, especially after, I think it was on Monday, that elective surgeries were able to start taking place. There's a bit of a relaxation in some areas, and some businesses' turnovers are starting to increase, but they're still eligible for the full 6 months if they go back to work next week or the week after, or whenever that might be. Just got to remember that it's going to take quite a long period of time for businesses to go back up to the same level of income that they were when it got shut down. So some people tell me, oh, I feel guilty because all of a sudden I'm going to be back at work, but you're not going to be back to 100% earning capacity from day one. And it's especially the case with the hospitals, in that I think their operating theatres are allowed to run at 25%, for example. So the income's not going to be back up to where it was at the start of March. So that's the intention of the program, is that they're going to give everyone the full 6 months of wage subsidy to help ride it out and sort of hit the curve back up again as far as income's concerned.
Yeah.
So are there any consequences of using JobKeeper? Is there a downside?
I think the downside is primarily based around eligibility as a business. So as an employer, you need to be pretty confident that you're going to be eligible before you just enroll. Potentially, you know, if you're not eligible and you enroll and claim JobKeeper payments, the consequence could be that you need to pay all that back, even if you have paid top-up payments to staff, all that sort of thing. I think it's probably unlikely where you've made a genuine attempt to make sure that you meet the criteria, but if we're talking worst case, that's probably the worst case.
I think staff management is a big issue with JobKeeper, guys, and you're probably hearing it a fair bit. All of a sudden now, employees know that they're on protected earnings for the next 5 or 6 months. So keeping them motivated and keeping them obviously at work and making sure that they are happy and they are being productive is going to be a bit of an issue when you come to month 3, 4 or 5, I think. And we're already hearing stories now of employees that aren't rocking up to work because all of a sudden they think that they can still get the JobKeeper payment and things like that. So I think people management through this process is going to be a huge part of it. It might not be a downside, at least, but it's something that businesses have to watch, especially if you're in those industries where you kind of can work a little bit, but not at 100%. So people are being asked to do reduced hours, or people are asked to do different things than what they might normally be doing. For example, you might be doing stock taking or training or process management. Getting employees motivated for that is going to be an issue down the track. It might not be a bad thing, but it's something that everyone's going to have to watch, I think, because some employees are just going to say, yep, we're on JobKeeper. Okay, cool. We've got income for the next 6 months. So keeping staff motivated and really helping out your business is going to be an issue and a challenge for people.
Yeah, I think the other challenge that I've heard from some businesses is because we did see that bit of a time lag between when businesses were required to shut and then when the JobKeeper came out, we've got multiple HR issues where people have either had to actually terminate staff or perhaps stood down, and there's different implications there. that's where getting some good HR advice is going to be really important in terms of, you know, whether you're bringing back terminated employees and what does standing down employees mean too. So you've got the tax issues, but then you've got the HR and the people side of things. I think you're dead right, Pete's. An extra challenge or an extra element of this as well.
Scotty, a question for you. I've had a couple of, clients that have terminated staff, say on the 26th of March, before this whole JobKeeper thing came out. And now they obviously want them back on the JobKeeper program. My understanding is that they can do that provided they were employed by the 12th of March. They can reconnect the employer with the employee. Is that what you guys are seeing as well? A little bit of that?
Yeah, we are. I think the real complication comes where you've made people redundant in that period instead of just terminated, and you've actually paid them out entitlements and what you do there in terms of either, you know, trying to undo that can become, well, it's a bit of a minefield, really. So, yeah, just be careful. It is really difficult at the moment because you kind of got a few different situations where you could have either stood down staff, terminated them, or made them redundant, and how you bring them back into the business under each scenario for the purposes of not just JobKeeper, but all your sort of fair work laws it's really different under each scenario. So just be careful.
And they have to be actively connected to your business still, don't they, really, to get JobKeeper? Because I've heard of some stories where people they've been terminated, for example, on the 26th of March, and then all of a sudden 3 weeks later they rock up to their old boss and go, "Hey, can I have JobKeeper?"
JobKeeper, yeah.
And the answer is no. You have to be still connected as such. That's my understanding?
Yeah. I think the big difference is understanding the difference between terminated and stood down too. So you might have employees that have been stood down. So they're still employees of your business. You just don't have work for them. You know, they form part of your employees that you will likely need to be paying for JobKeeper, whereas your terminated employees, you have actually severed that employment relationship with them. So there's a lot of differences there, and getting some good HR advice around that's going to be really important because it is a tricky area.
Yeah, and in terms of JobKeeper, employees that have been stood down, you still have that connection with the employer, so they will be pretty much automatically eligible for JobKeeper unless you do then terminate them. Staff that have been terminated or made redundant, you need to do something to bring them back into the business if you intend to put them on the JobKeeper program or re-employ them.
Yeah.
The other thing is that
you go.
It's one in all in is a question we get quite a fair bit, is that once you put one person on JobKeeper, you have to put your whole business on JobKeeper. Okay, so and that's where you get commonly with some people that would have only been earning $500 or $600 a fortnight on a part-time basis or a permanent casual basis. You actually have to top their wages up to $1,500 a fortnight out of your own pocket before you go and get reimbursed from the tax office. So it is a question commonly asked where people say, "Oh, we don't want that guy on JobKeeper." Well, if you don't want them on JobKeeper, you actually have to terminate them properly through HR reasons and things like that, which, as Scotty and Michelle said, is a bit of a minefield sometimes.
Yeah, you can't just make a judgment call on which staff you're going to include in JobKeeper and which ones you aren't. If you're eligible as an employer, you need to at least make the offer to all the employees. If they're then not eligible because of some personal reason, like they're claiming it from another employer, for instance, that's fine. You don't have to then include them under JobKeeper, but you can't specifically exclude employees just because you choose to.
And you don't have to offer JobKeeper. Like, I've had a question from an employer,
Mm.
and the whole business is just shut down. They don't want the administrative burden, or they don't want to have to fork out the working capital, even though you can get it from a bank. So they've just said, no, we're not offering JobKeeper to anybody, and just effectively shut the doors. So there's no requirement to go on the program, but once you're on it, it needs to be all in.
So what is if you are on JobKeeper or you participate in the JobKeeper program, what impact will that have on future entitlements? And also, what about super payments?
Yeah, so superannuation, sorry, Michelle.
No, you go.
Yeah, so super payments, if you're actually physically working in the business still and being paid for the ordinary hours that you do work, then the employer has to pay superannuation on those amounts. Whereas if you're not working in the business and you're being topped up on JobKeeper, or you've been stood down and you've been paid a pure JobKeeper amount, then there's no requirement for superannuation. As far as other entitlements are concerned, I think you might be talking things like Centrelink entitlements and things like that. Is that right? So obviously, JobKeeper payments are accessible. So it does go in your tax return. It will be on your pay-as-you-go payment summary as an employee and things like that. So you will have to declare it to Centrelink for if you were on JobSeeker before, or if you're on family tax benefits or anything like that. A JobKeeper payment by an employer is taxable as if it was normal wages from there.
Probably the other entitlement that comes to mind is the apprentice and trainee subsidy that was announced back in March. So you can get that if you meet the rest of the eligibility criteria. You can get that for the first quarter, so January through to March 2020. But if you then go as an employer onto the JobSeeker program, that apprentice subsidy will cease from 1 April. You can't access both of them. I'm not sure about any other sort of entitlements out there. So
I'd just be careful when you're standing down employees that you still have to accrue annual leave and sick leave on their stand down as well. So if you've got 20 full-time employees and they're at home getting the JobKeeper on stand down, then technically, obviously with HR advice, but there is provisions in the stand down rules that you have to keep accruing their entitlements while they're being stood down.
And that stand down's not, it's not something that's come out of JobKeeper. Stand down rules have been in place with Fair Work forever. They have tweaked them a little bit to make things a bit more flexible with COVID-19. But yeah, stand down rules have been around for a long time, and that's based on Fair Work legislation as opposed to the JobKeeper, which is on the tax side of things.
Mm-hmm.
We were doing that a fair bit before this JobKeeper came out, weren't we? I mean, talking to you guys, a lot of clients were standing people down, and then JobKeeper came out, and then they brought them all back. And in some forms of sort, you've all seen shops in town that shut down, all of a sudden it started back up again, in East Street in particular. And that's because obviously they're able to keep going with JobKeeper and what have you.
Yeah.
I was just going to mention too, in relation to that trainee and apprenticeship subsidy that Michelle started talking about, I'm finding at the moment a lot of people are a little bit blinded by this JobKeeper and trying to either work out eligibility or work out which staff are eligible, that they are sort of forgetting about a lot of the other stimulus measures that come out. And that trainee apprenticeship subsidy is a really good one. And it's not based on any sort of decline in turnover. Basically, if you're an employer and you have a trainee or an apprentice on your books as at the 1st of March, I think it was, and you're a business with less than 20 full-time staff, you can claim this trainee / apprentice subsidy. The value of that is a maximum of 50% of the apprentice's wage, or $7,000, whichever works out to be the most.
That's per quarter.
Per quarter, yeah. Per quarter for April, June and September quarters. So potentially up to a $21,000 benefit for any business that employs trainees or apprentices and have less than 20 full-time staff. No need to demonstrate any sort of downturn in turnover. It's just an additional subsidy, so don't forget about that one.
That chat box question is a good question that we've received.
Yep. So I'll just read the question. The question is, my son is a sole trader, and when he goes into the website to register for JobKeeper, one of the questions is, has he had assessable income in 2018-2019 income year and provided notice to the Commissioner on or before the 12th of March? He has not done this, and he does not lodge BASs. Should or can he proceed?
Oh, the answer to every question, it depends. So I've actually got a client in this circumstance as well. So that requirement to have basically lodged your 2019 tax return by the 12th of March, the ATO has discretion around that, and they've said where you've already got a deferral in place, perhaps, you know, because of the bushfires, or if you're on a tax agent list and your tax return wasn't already due for lodgement, then they will extend that time frame. So, you know, specifically for that person that's asked the question, it's going to come down to whether their son's on a tax agent list or not.
And that they had assessable business income
Yes.
in the 2019 year as well, because that's important to note. Also, we've got a couple of clients that have started up a sole trader business at the start of this year who aren't registered for GST. I don't think that they're eligible under the current rules. So there is a bit of a trap there, isn't there? Is that what you guys are finding as well with those ones?
Yeah, I'm not 100% sure about that one, and whether you know, there might be some ATO discretion around that on the lodgement criteria as well. They've not said a huge amount around that, but it certainly seems to be a bit of a black hole there at the moment.
That seems to be one of those things they're kind of making up as they go at the moment.
Yep.
I think, you know, those people that aren't perhaps used to seeing so much tax legislation come to light, normally this sort of stuff is in the works for months and months, and you have people poring over it and figuring out all the possible, you know, outcomes and combinations, and they legislate around that and figure it out. Whereas this has all happened so quickly, where, you know, the ATO is kind of making it up as they go along, and they're trying to adapt and make it as fair and as open as possible. But it's definitely tough.
Mm-hmm.
Hey guys, I've got a question from the Facebook Live, and it's specifically directed to the ANZ team. You can hear me okay? Excellent. So it says, with regards to the coronavirus SME guarantee scheme, does it relate to applying for one of your existing loans, or is it a newly created package? Are the rates different, or is primary advantage the government providing 50% of the security and the applicant not having to provide any security?
So it is a totally separate loan. You have an option of an overdraft or a loan. The overdraft is a 6-month solution that you can then roll into the business loan for another 2.5 years. So the maximum term and our servicing is completed over a 3-year period. It does have no loan approval fees, no loan administration, and the security required is a guarantee from the director if it is a company that's offering it. So, you know, like it is seen as a totally separate loan. When we're talking to the customer, we're needing to understand what they're needing it for. They're really aimed at, you know, covering those expenses that they're not able to because their cash flow is not there at this particular time. And it is still going through an assessment. It's just not a given because it's being guaranteed, 50% of it is being guaranteed by the government. It still means you're fully responsible for the repayment of the debt.
Right, so let's hop over to the next question. Is there anyone on the Zoom meeting that would like to ask a question? We're getting to the end of our call, so I'm keen to leave enough time at the end for people to be able to ask questions. Okay, so my pay cycle is not fortnightly. How do I make the top ups, etc., if I pay monthly?
I think for April, like to qualify for the first 2 fortnights in April, previously the ATO was saying you could do your top-up payment by the end of April, and now I think they're saying the 8th of May. Is that correct? Yeah. So if you haven't yet paid your top-up amounts and you want to claim for fortnight 1 and fortnight 2, which both ended in April, you do have until the 8th of May to pay that top-up amount. But going forward, I think what the ATO expect is that on your regular pay, which in this case looks like it's monthly, that you will be paying employees at least that $3,000 for 1 month was 4,500 because it's 13 fortnights. That was
there's 3 fortnights in there. Is it August or September? I think you probably hit the 3 fortnight month.
Yeah.
There doesn't seem to be any sort of averaging, like you don't add up the 13 fortnights by $1,500 and then divide it by your 6 months. They're really looking at it at that $1,500 a fortnight basis. So when you do hit that 3 fortnight month, you might find you've got some top-up payments in there.
Yeah.
So the ATO are okay with, Scotty, the ATO are okay with, if you're usually on a monthly pay cycle, you can skip a JobKeeper fortnight provided you make it up in the next fortnight. Is that what?
Yeah.
Way they've read it? Yeah.
Yeah.
So in that case, you can, if you've already done your monthly pay for April and you're looking to do a top up, what you'd have to do is just an out of cycle pay run, basically, to top all eligible employees up to that $3,000 for the first 2 fortnights in April. But going forward, the top up provision, or the ability to top up wages, was only there for the first 2 fortnights in April. So going forward, you'll need to make sure that your monthly pays are done on the basis of those minimum amounts, and that you're not processing your regular pay and then a top up every month. That was really only allowed sort of as a once off. Is that right, Michelle? Pete, is that...
So, yeah.
Sorry.
Bye, Michelle.
No, you're right.
So are there any other traps that we need to be aware of moving forward? So now we know that we can enroll for JobKeeper and the government's trying to help us, but what should we be thinking about as business owners moving forward over the next 6 or 12 months?
So in relation to JobKeeper, I think Scott's last answer was the big one, is that employers need to make sure that they pay the minimum amount, the $1,500 per fortnight, or if you're on weekly, $750 per week, each time, to make sure that they're eligible up until the end of September. So that's just in relation to JobKeeper. Once you've done your enrollment and everything like that, you really need to be strong on making sure you're disciplined and paying the employees the right amount each JobKeeper fortnight. Look, the minute you get that wrong, yeah, there could be some issues there. The other thing that employers really need to be careful of is obviously cash flows and budgeting, and how they get out of that with what base they have, because what we're finding a lot of clients have done is all of a sudden they've all of a sudden stopped operating, and then all their employees have gone on a JobKeeper, which has essentially kept everybody employed by the business. But once we get out of this cycle and JobKeeper stops, does your business need that many people? Is the income there that's going to be able to support this level of employment? Really watching your figures on a monthly and even fortnightly, weekly basis is going to be so important once JobKeeper stops, because the businesses are going to be used to having these wages subsidised, that when that stops, we really need to look at, well, what does your business look like from an income and a turnover point of view? And what are your expense loads after that? That's going to be so important as to how people get out of this for the next 12 months, is really reviewing all their expenditure, looking at what incomes and customers they're going to have, and then going from there. What are you guys thinking?
Yeah, definitely. It's going to be critical. I think a lot of businesses will sort of, the JobKeeper will sort of tick along, and then all of a sudden be like, oh, geez, that stopped. Now what? You need to be thinking about that now and starting to plan ahead.
Yeah, I agree. The challenges will be once restrictions start lifting, is to try and get your trading level back to where it was before all this started, so that once JobKeeper runs out, you then have the ability to keep all your staff employed in your own right. And that's going to be the real challenge. That's going to be an economy-wide issue, isn't it, really? All these people that are still attached to employers through JobKeeper, is making sure that come the end of September, what percentage of them are going to stay attached and what percentage are unfortunately going to have to be realigned into other employment and things like that, based on people's
habits and attitudes changing towards certain things, and what the restrictions are going to be then as well, because are that many people still going to go to the pub or go out to restaurants and places like that? That's going to be the interesting thing.
Yeah, and again, making sure that you know, when we get to the other end of this, that you are managing those HR implications as well, because that's one thing that I've had flagged with a couple of businesses is, okay, it's great to keep, you know, the 10 people on employed now, but if you're not going to need 10 people once the JobKeeper runs out, you do still have your HR, your Fair Work obligations. And if you're looking to terminate someone, you need to be following the proper process. Otherwise, you could find yourself subject to an unfair dismissal claim. So, I know we've mentioned it a few times, but the HR side of things is really important for businesses to manage.
Okay, guys, I've got a question.
I was just going to make another point of JobKeeper that we haven't specifically covered today. Is there's a lot of statements out there that you must pay the employers the $1,500 a fortnight, and we've even said it here today. It's important to note you're not giving the employee the $1,500. You've got to take tax out of that. So the employees will probably end up with roughly $1,300 in the hand, and then you pay the pay-as-you-go withholding to the ATO as you normally would. So make sure it still goes through like normal wages effectively, and you're taking the tax out of it. So don't think that you're giving $1,500 cash to the employees. And I think that's a misconception from the employees' perspective as well. They think they're getting $1,500 in the bank, but they're not.
Yes, very important point to make. Just a question that we've got on our live stream. So if we qualify comparing March 2019 against March 2020, then we don't have to qualify any further. Once we're in, which I think we've answered that one already. And if we have staff that will no longer work because they're getting the payment, we can't do anything about that. So I think they mean the JobKeeper payment.
Yeah, so I had a client in this situation yesterday, and they're seeking some HR advice, but the expectation is that the employees, obviously the employer can direct the employee to reasonably do similar hours and also do reasonable tasks within this period. And then if the employee fails to do that, the employer, obviously if you go through your correct Fair Work and HR steps, they can disconnect the employer-employee relationship from there if the employee fails to reasonably A, show up for work, or B, fails to reasonably do what's asked of him from that point of view. But you do need to make sure you go through your Fair Work steps as you would normally do when you're terminating an employee. I have seen that a couple of times already, which is quite unfortunate in this situation. Have you guys seen it at all? Or?
I've heard stories.
Yeah, important to remember that JobKeeper, if an employee leaves your employment, whether they resign or whether they are terminated due to non-performance or abandonment of employment contract or something like that, then they're not eligible for JobKeeper from that point forward. You have to maintain that connection with the employer and the employee for that employee to still be able to gain the benefits of JobKeeper.
It's important for the employer to document it, to say, hey, we requested John Smith to come to work on this day. He did not show up. We gave John Smith a phone call. He did not reply. It needs to be documented so heavily as to what the employee is actually doing and as to why he's not showing up, just so that the employer can cover themselves from a HR point of view down the track.
And that's, again, no different to any other time, just because JobKeeper's at play. It's following that proper Fair Work, dismissal process.
And the last part of her question that she's just added was, and we have to pay super on that amount also, which is that the case?
What?
No.
If they're not working, and the $1,500 is just the straight pass through, so the business collects it from the government and pays it to the employee, and they're not doing any work at all, there's no super guarantee liability at all either. if the employee is doing, say, $500 a fortnight worth of work, as in hours by their normal rate, and that's what they would otherwise earn, you would pay them super on the $500, but not on the top-up amount of the $1,000, if that makes sense.
The quick question here was, the ATO pay it back to us, so they pay us the full $1,500 per employee back? Yes, so they pay the employer the full $1,500 back from there.
Yeah, and you'd still remit the pay-as-you-go withholding through your monthly or quarterly BAS as you normally would.
Yep.
And then you'll likely also get the boost payment in respect of that as well. So that's a little bit of a bonus there.
Mm-hmm. Depending on your circumstance, yeah.
Mm.
Wonderful. Peter, Scott, Michelle, Canaz, and Evans Edwards, thank you so very much for clarifying the tips and the traps of all of the government subsidies and help that we're currently receiving from the government, especially around JobKeeper. Thank you for making it clear, for talking to us in plain English, and for answering all our questions. We really appreciate your time. Just before we say goodbye, we literally have 1 minute. Can you leave us with a short snippet of a summary or wisdom that you'd like to share just before we say goodbye?
Yeah, go Scotty.
Don't all jump in at once. No, I was just going to say, you know, like Pete said before, JobKeeper is a good safety net, but it's only going to go for 6 months. So you can't put all your eggs in one basket and presume that because you can claim JobKeeper, your business is going to be fine and you're going to come out in the next 6 months unscathed. You know, a lot of people are blinded at the moment by the level of stimulus that's out there, and they're to a degree forgetting that they have a business to run. So, you know, nothing really changes from that perspective. You have to just get back to basics and make sure that you're doing all the things you were doing before, and servicing your customers and keeping your staff happy and keeping them at work and doing all that normal regular stuff is what I would say.
Yeah, I think thinking ahead, which is tough at the moment, but, you know, looking at how you're going to re-engage with your customers as well, and what your business model looks like going forward, so that as restrictions do start to ease, you can really hit the ground running with, you know, what your business is. So yeah, think ahead.
My big thing is make sure you keep watching your numbers and keep an eye on how they're going and how this is going to look. Exactly what Scotty said. Once we get out of this, it's essentially when this JobKeeper stops, what's going to happen, but also have a look at your numbers this week, next week, because you're still incurring a lot of costs, even though you have wages that are being subsidised by the government. Like there's still electricity, there's still rent that you can obviously negotiate with the landlords and things like that. But you need to look at all your costs and compare them to the incomes that you're receiving now, to make sure that you as a business aren't going backwards in these times, even though you are getting the wages subsidy. And then also work on your business and work on the things that you wouldn't normally do because you have got less customers and you're less busier and things like that. So processes, technology, staff training, things like that are really important at this time.
Awesome. And finally, thank you very much for that. Finally, Julie, April and Lynn from the ANZ Small Business Specialist team, thank you so much for joining us. Would you like to share your final words of wisdom?
We think the most important thing is that anything that you're getting from the bank, even though they are government subsidised, they are still loans. So it kind of backs off what the accountants are all saying, is that at the end of this, you know, your cash flow still has to be there to be able to repay the debt. So always talk to your accountant before you kind of decide to take on any of these loans, so that you know that there is going to be a light at the end of the tunnel for you.
Wonderful. Thank you so much for joining us for our Lunch and Learn. If you would like to hear more from us, join us on Thursday at 1 o'clock for our Hub Live. And of course, we'll have another Lunch and Learn for you at the end of May. Keep an eye on our Facebook page or on your email. We'll certainly be letting you know the time and the date. Thank you so much, everybody. Really appreciate your time.
Thank you.